Today's sponsor is BT Miners. BT Miners has been a longtime sponsor of the channel and a proven reliable source for ASIC miners. If you are looking to purchase ASICs hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners has recently launched an app on iOS and Android that lets you browse their inventory by profitability and return on investment. Follow the affiliate link in the description and use promo code SOAT for a discount. Let's go ahead and take a look at Bitcoin halving and how it's poised to unleash Darwinism on miners. This is an opinion piece, of course, and it goes on to say that strong miners might be about to eat the weak ones as the reward for mining Bitcoin gets cut in half, experts say. Darwinism could soon pummel some Bitcoin miners as the halving, a once every 4-year event that cuts the reward for creating new Bitcoin, gets cut by 50%, unleashes a survival of the fittest battle in April. To prepare for the disruptive event, larger companies are securing newer and more efficient mining machines, but they might also consider gobbling up smaller miners as they figure out how to both survive and benefit from the halving. Just ask Marathon Digital, the largest publicly traded miner by hash rate, industry jargon for the computing power that it can direct towards running the Bitcoin network. The firm said this week that it's got a hoard of money, more than 800 million of cash and Bitcoin, and will seek to grow that to capitalize on strategic opportunities, including industry consolidation ahead of the halving. Now, from my perspective, when we're talking about getting into crypto mining, and I covered this over on my crypto mining e-course at sonofatech.com, we're kind of taking the scraps from these larger miners. As these larger miners start to put capital into new machines and start to liquidate their old machines is when we begin to see like this ability for people that aren't necessarily in the industry to start breaking into the industry. And this is because what they are doing is replacing extremely, cheap machines now at this point with extremely expensive machines. And they're usually just trying to move a lot of it in bulk. This is why we saw things like S19's 95 terahashes going for under $500 a pop. And the thing is now the industry is quite shifted. Whereas previously, there wasn't a ton of custom firmware in the last bull run for a lot of ASICs. They kind of started to play around, right? We saw some of the Z-Links boards come out. We saw some custom firmware. Low power mode really didn't get a good push until the bear market. And then custom firmware didn't get a good push as well. And a lot of these older miners, you can get very, very good efficiency off of them if you're willing to put in the work. And the thing is people that are running large companies aren't always willing to put in the work there. So this means that you have this kind of opportunity to capitalize on, and it's something that I've been doing personally on the ASIC side, buying up a lot of these used ASICs, getting them cleaned up, putting on firmware that makes them extremely more efficient than they were when they were running with those farms. I mean, to give you an idea, when I'm picking up these machines from these large liquidations from these larger firms, they are still stuck on firmware that is old as hell. They didn't even during the bear market go, hey, should we flash a lot of these? Which you could do very simply with something like, Foreman or whatever. You could go through and flash all of them to a low power mode pretty simply, and you could have been way ahead. So when they're looking at efficiency, they're always looking at efficiency overall and just buying the machines, taking them from Bitmain as they are and deploying them to the network. And that means that when they go ahead and sell them, their perception of the value is much lower. And so that gives you an opportunity here to hop in. And that's what I've been doing specifically with Coastal Crypto. Shout out to Coastal Crypto and BT Miners when BT Miners has some. And then there's a lot of other outlets that you can look at. There is firmware across the board for a majority of these machines as well. Worst case, you can pick up a separate hash board for, somewhere between $50 to $150 depending on which board you're going with, and you can get these 30 plus joules per terahash down to 20 to 25 joules per terahash and start competing with the newer equipment that's coming on for a lot cheaper. And this is really kind of something to take a look at. And I think when we're talking about these guys looking at efficiency, trying to be more efficient, I think they're making a lot of mistakes, and they're not actually utilizing their money, their capital, in the best forms possible in all cases, right? So let's go ahead and move on though and see what they're doing. Another large miner, Hut 8, just completed its all-stock merger with a privately held US Bitcoin. CleanSpark has been collecting cheap assets since the start of the bear market and said that it has almost $170 million shored up to take advantage of opportunities the halving may present. And Riot Platforms, another institutional grade miner, has just ordered 66,560 new mining machines for $290.5 million to stay ahead of its competition. The scene is set for a dog-eat-dog competition. Quote, leading up to the halving and in its aftermath, miners will need to place substantial emphasis on strategic planning. The adage, quote, if you aren't growing, you're dying, holds true, end quote, said Amanda Fabiano. And this one I definitely agree with right now. I've been talking about this for a while. I mean, I get it. A lot of people, when they saw me sell kaspa to purchase Bitcoin ASICs, they think it was a dumb idea. They're always looking at the short term, but you got to understand, I'm a miner. I'm growing my crypto mining farm. And if I'm not growing that farm and I'm sitting on crypto, I'm sitting on capital, and I'm not generating more revenue or the potential for more revenue, I'm dying. And that is the way this industry works. You need to always be working towards something to become more efficient, reduce your power costs. If you can increase the amount of power and cut a deal with a power company, you need to increase the amount of equipment you're holding. If you're not growing in cryptocurrency mining, you are dying. And that is the only way to survive. The good news is, of course, on the GPU mining side, just as a tangent here that I've noticed, is that for the most part, the 30 series is still extremely competitive to the 40 series. Now, in these recent releases of these new algorithms or new cryptocurrencies, not really new algorithms, we are seeing, the 40 series outperform the 30 series and something like Carlson. But it's important to note that that's because there is no ASIC resistance deployed on those. So from a GPU mining perspective, I don't think it's something that you need to freak out about. If you sat on 3000 series, sold off all your 2000 series last bull run, I think you're in a very good position here. So you did hold through, you didn't sell off at super cheap on your GPU prices, you kept those in stock while like me and tried to maintain and get through it, get through with some really good speculative mines like kaspa, and so on, and get yourself in a position where you're able to deploy more capital during the bear market. You're going to be in a very good spot running up into 2025, at least in my humble opinion, not financial advice, just what I'm doing, right? So, in fact, mining consultancy firm Blockbridge said that a dozen public mining companies have already committed over $1.2 billion so far this year to buy mining machines, with about $750 million US signed over the past 2 months. So how do we get here, and why are the miners racing to gear up for the halving? The Bitcoin halving, also known as the halvening, in simple terms, will make obtaining or mining new Bitcoin much harder. The halving is part of the Bitcoin network's code to reduce inflationary pressure on the cryptocurrency and will cut the rewards in half for successfully mining a Bitcoin block. A useful analogy that might resonate with the non-crypto crowd: think about extracting a finite natural resource such as gold or oil from the ground. The more that's obtained, the less that's left, making the remaining resource more valuable yet more expensive to extract. Now swap out whatever traditional commodity you had in mind and replace it with Bitcoin and crypto mining. That's the halving, a classic example of the supply and demand cycle creating scarcity-driven value for an asset. It's something Bitcoin creator Satoshi Nakamoto believed in. In fact, Bitcoin might actually be even more scarce than gold. Historically, the event has increased Bitcoin prices exponentially, creating a generational wealth for investors, but a presenting challenge for the miners that actually create Bitcoin. During the third halving, which occurred in 2020, Bitcoin's price went from around 8,500 to nearly 18,000 within a few months, while the reward for successfully mining a block was cut from 6.25 to 12.5 to 6.25 from 12.5. There you go. Yeah, so we're at 6.25 now. This time the reward will sink to 3.125 Bitcoin, making mining even more competitive. In previous cycles, there weren't many large-scale miners and even fewer publicly traded ones. During the lead up to the bull market of 2021, a swath of miners jumped into the sector to reap nearly 90% profit margins at the peak. As Bitcoin neared 70,000, miners were making money hand over fist, and many were spending and taking on debt to grow faster. Investors, including traditional financial firms, lavishing miners with cash to fuel growth, also incentivized breakneck spending and growth at any cost. And this is kind of the thing where I think people miss it. And I talk about this in my crypto mining e-course. There was a point in the last bull run where I just cut back on the amount of GPUs and everything that I was buying. It didn't make sense paying $3,000 to $4,000 for an RTX 3090 when it was very evident that we were going to start coming back down, right? Now, on the ASIC side of things, it was even more ridiculous. An S19 at the time going for $8,000 to $12,000 US didn't make much sense. But now we can get those same units for a tenth of the price, right? We're talking about like $500 a pop. And if we look at the overall kind of cyclical nature of Bitcoin and the mining space, you will see the S19s start to resurface as higher prices. So if you're just even looking at flipping equipment, it makes a lot of sense. It all came crashing down during the 2022 bear market. Profit margins got crushed and some big miners filed for bankruptcy, and access to capital markets was shut. Many miners still operating are barely surviving, waiting for the next bull run to save them. The rally in Bitcoin prices in 2023 fueled mostly by the optimism that U.S. regulators will approve spot Bitcoin exchange traded funds, or ETFs for short, from the likes of BlackRock has helped miners somewhat. But with the Bitcoin network's hash rate at an all-time high, the difficulty mining a single block is also at a record high. High energy prices, which is definitely something to look at, and intense regulatory scrutiny, and still bone-dry capital markets, the mining landscape remains tough. I really honestly, over the past, few months, I think since about August, the mining landscape on the Bitcoin mining side has not been that rough. Sure, the margins are difficult, but you're still in profit, which means that if you expect everything to play out the same way in general, where you expect, the having to increase the price of Bitcoin, etc., exponentially like it has in the past, and you are still being able to purchase miners at a relatively cheap cost and then still be able to make those profitable even right now. I think over the past few months that's been the case. It's not really that sketchy of a plan. You were just talking about a slightly higher ROI time on those machines, but you're still able to stack Bitcoin that you aren't spending, cover your power, still have Bitcoin in reserve, which is increasing in value over the next year to 3 years. And I think you're in a good spot. I don't actually see it as that difficult. I think everybody getting scared is a great opportunity for everyone else, though, that's not scared of this in general. So we have a consolidation wave, which I think already happened, but miners who grew too fast are now cash strapped and looking for a light at the end of the tunnel. Struggling miners need to cut costs, shore up their balance sheets, and require more capital. All potential catalysts for mergers and acquisitions in the industry. I think a lot of this had already been happening, and I think maybe a few more will happen through April, and I think we'll see a lot of these mergers happen. However, like on the small mining side, if you're looking at just like building out your own private farm, I mean, this is where the opportunity is, because if you have someone like, I don't know, like just Marathon Digital buy up a smaller miner, right? And Marathon Digital's platform is like, okay, what we're going to do is we're going to buy all S21s, the latest, greatest. So when we take over, I think you'll start to still see an influx of new or more used units hitting the market, which should drive the price down, hopefully still through April, or at least that's what I'm hoping for personally. Cutting costs will likely be a major drive of an upcoming wave in consolidation in the mining industry. Executive salaries, insurance, and other expenses benefit from economies of scale in the post-halving environment, said Ethan Vera, Chief Operating Officer at mining firm Luxor Technologies. M&A can take many shapes and forms and can be complicated. However, one of the trends that might be prominent, according to Vera, is private miners merging with public companies. And I think this will happen. Quote, off the back of Bitcoin price momentum, shareholders of private and public mining companies will look for avenues to liquidate parts of this position through publicly listed vehicles. As such, many private companies will merge with public operating companies or shells to gain access to this liquidity, end quote, he said. They will likely follow Hut 8's merger and use that as a, quote, case study to combine entities that have both strong balance sheets alongside high growth opportunities, end quote, Vera added. Fabiano echoed this when asked about how this will play out, saying, quote, mid-tier and small-scale miners should prioritize positioning themselves on the lower end of the cost curve. One likely path is merger and acquisitions given the capital-constrained market. Meanwhile, larger miners should concentrate on growth narratives that set them apart from their rivals, end quote, she said. It seems the rule of the jungle is about to be unleashed on the mining industry, perhaps expressed by a Japanese idiom, and I cannot pronounce that, which loosely translates to English as the flesh of the weak is the food of the strong. So there you go. This is what they are looking at, you know, what the industry perspective on the halving is going to be. There seems to be a lot of darkness still surrounding the halving, which is really interesting because historically it hasn't proven out that the halving has really damaged a ton of miners. In fact, once that happens, we start to see the price increase. The expectation was somewhere between 45,000 and 50,000 US dollars per Bitcoin to make up for the halving, and at least when I'm looking at my numbers, and that would still keep everything profitable. So the fact that we're already at 43,865, way ahead of schedule, in my humble opinion, just gives me more light at the end of the tunnel to keep building, because at this point, it still will be profitable. Yes, the margins will be less, but then that'll get pushed up in price as people try to build larger and larger firms and so on and so forth. So it doesn't scare me. I'd like to hear your thoughts and opinions. Are you fearful of this halving from the Bitcoin mining perspective, from the GPU mining perspective? What are your thoughts on it? I definitely want to find out. Of course, from the other side of things, if you're looking at it from a GPU mining perspective, a lot of the other coins that are GPU mineable are not going to be hitting their halving events. And to top that off, a rising tide raises all ships. So the price of Bitcoin increasing should increase the price of all GPU mineable coins, or shit coins if you prefer to call them that, which means if you're on the GPU mining side, you're probably going to benefit even more heavily off of this than you are on the ASIC side. So it's pretty incredible. The only reason I really do the Bitcoin mining ASIC side of things in general is to just hedge bets and have a more stable income. It's easier to predict, it's easier to play with, and you get kind of that base level revenue that for your cash flow that allows you to be riskier on the GPU mining side and so on. So on the GPU mining side, right, a lot of spec mining, a lot of mining a ton of stuff before it even hits markets, building up large bags of things that have never been listed on an exchange, just to see if we can do that. Cover the cost, you know, with the Bitcoin miners, play it riskier on the GPU mining side, and sit back and see what happens. And it seems to be playing out quite nicely, especially over the past few months. Now, you guys mined during the bear market, you made it through, well, at least maybe a half of you. I know a lot of you motherfuckers over here didn't actually do it, but the ones that did, I have a new shirt for you guys, and it says, I mined with the bears for the bear market, okay? So if you mined with the bears and you want to rep that you did mine during the bear market, go ahead and head on over to shop.sonofatech.com and the listing will be down below. I'll put it in live chat right now. I have a sweatshirt, there's a sticker if you'd rather have a sticker, t-shirt, premium shirt, all that cool stuff. Really like the new shirt. I ordered a few for myself, and I just had that design finished this week. Eventually it'll be on the YouTube channel, but that takes a little bit of time, so just give it some time. Proceeds, of course, go to supporting me in the channel, so there you go. And I thought we put some work into it, and I thought you guys might enjoy it. Thanks for watching this clip from the Crypto Mining Show. You can check out the full episode here, and don't forget to subscribe down here as well. You can also check out my crypto mining e-course at sonofatech.com, where you can get a free month of supporter status with a purchase at sonofatech.locals.com. Also, don't forget to check out my merch underneath the video or at shop.sonofatech.com. I'll see you next Tuesday.